Yep.
All right, hello and welcome to Boom and Crash Expert Advisor. Today we'll be dealing with spikes, and I have with me a guest. I call him ATM, or he's popularly known by the acronym ATM. He has been trading forex. He's been into the trading business for about 8 years, and he has much experience. He goes trading, mastering indicators, mastering the trends and price action, and all you can think of when it comes to trading. Today, it is a great privilege to have him share with us his depth of knowledge that he has accumulated over these years, almost a decade of trading. Man, it's not been easy. I'm sure he would love to share with us some experiences of recording huge losses, moments of disappointment, the hidden side of the story we do not hear. Most of the times you hear people making millions and tens of thousands with forex when it comes to trading, but we do not hear of the down moments, the losing moments, and all that. I'm sure he's going to share with us how he climbed through the ranks throughout the years. He learns from his mistakes and all that, and how he has been able to master like a monk on the mountains. He's been able to master his way around the whole market. And recently he spoke about spotting boom and crash somewhere on the internet, and he was like, man, this is going to be an easy market, and he's milking the market. So it is my greatest privilege to introduce to you all ATM. He is also the founder and creator of Boom Crash Strategy, a new YouTube channel that I recommend you subscribe and you follow. And trust me, you're going to learn a great deal of stuff. So I'll welcome ATM to take over. Thank you.
All right. Thanks for that great welcome. And yeah, guys, so I'm here today to be able to help you understand the psychology of the market, understand how to take trades, understand how to win. Because the main thing you want to be able to do first is put knowledge in your brain before you think about putting money. So I'm going to be explaining a simple strategy for you guys today. Let me get it set up. All right. So we're on Crash 1000 right here. And as I go on ahead and set up my chart here, I'm going to show you guys how I set up my TradingView chart. And I use TradingView more frequently than I use MetaTrader for the sake of being able to use all the drawing tools that TradingView has on top of some of the extra little features that are inside of the chart. And I'm going to go through some of those things today. So what you want to do first off is get on a daily chart so that we can understand where we are. That's how we want to start off. I'll go in, I'll use the horizontal ray tool, and I'll add 2 lines to get the high and the low. From that point, I'm going to break this chart down into the 8-hour. I can fine tune these lines, find points where they go to, and I'm using the magnet mode here so it snaps onto the candle. And what I'm doing here is finding boundaries. So then that way, if price breaks the low, we know we're going to continue lower. If price breaks the high, we'll continue higher. So what I'm setting up here on my higher time frame analysis. And what I typically have it on is the 4-hour chart after I've done my higher time frame analysis. Now, a little secret over here, right click the chart, go ahead and hit the countdown selection over here, and that'll align is in the current candle. Now, you guys know I use the Heikin-Ashi candles, so those can be found right up here in your chart types. So I switched them from regular to the Heikin-Ashis. And what that does is it averages the last 2 candles together into one. So with our bias being down, you can understand and see how over here on the 1-minute chart, we're getting a lot of spikes today. Knowing this bias ahead of time sets you up for your day. You have to do this as a routine, because if you just come into the market and just say, all right, it's crash, I'm going to go ahead and buy today, just because you didn't check your higher time frame. So by checking your higher time frame, this will immediately help you eliminate the losses that you're already going to encounter just by not knowing what the strong trend of the day is. Okay. So what we want to do here is basically our higher time frames, the daily, 8-hour and 4-hour, and we can zone in on the 1-hour because we have 24 hours in a day. So each of these hours, right, this is 60 minutes, right, of trading. Think of it that way. The hour time frame is a neutral zone. It's 60 minutes of movement. So how can we see that on a 1-minute time frame more accurately? I'll show you a little secret over here. What you want to do is use your drawing tool called the cyclic lines. They're cycle lines, okay? Now, if you want to, you can come down here and look at the time and plot it from hour to hour. A faster way to do it, put this time chart on a 1-hour time frame, and then you're just going to drag it from one candle to the next. It's going to put a lot of lines on your chart. So here's what's going to happen when you go down to the 1 minute. Is now you're going to get your time frames locked in right on point. All right. So let me fine tune that just a little bit. It's off by a minute. Let me do that one more time. I think it's off by a minute. So let me go from this hour right here. I'll show you another way to do it. You can just go from this hour to the next hour. Okay. And then make sure you lock your drawing tool so that way you don't move it when you're moving your chart around. Now, what this has done for us, right, is it lets us see where the hour opens and where the hour closes. So we can use the same method that we were using on our daily time frame on our 1 minute. So the most recent hour opened here and it hasn't closed yet. So that means this is our hour low. Okay. Now, just for the sake of example, let's track our previous hour. Okay. So this was our hour high from the previous hour. It went down to the low. It broke that high. So this became our new high, and it broke the low where the new hour opened. The reason why you want to have these drawing tools on your chart is because it's going to help you understand where price is moving within the next 60 minutes. So the one thing you want to be able to do